Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Thursday, the 19th of May. Starting off with the FTSE 100 and still in this consolidation between roughly 60.50 and 6,200. 62.01, the 50-day moving average. We had a shooting star candle earlier this week. Yesterday, a hammer candle, and a hammer candle on Friday as well. Basically, still the market making its mind up about which way it wants to go. We've got the half full message from the bounce off this uptrend line from February, and half empty in terms of the RSI below neutral 50 at 47. Given what it's, well, if you've got to choose, probably the RSI below 50 is the determining direction, and also being below the 50-day moving average probably at this stage as well. But obviously wait for either end of the day close back below 60.50 or above 6,200 on this. Above 6,200 points, 65.50 still, which is the top of this early 2016 charting formation. For the DAX, same sort of spoofing activity, bouncing off the floor of this rising trend channel from February. That will be difficult to break. So far, two higher lows versus the 97.37 floor that we've had. Obviously, an end of day close below 97.37 would be the sell signal. End of day close above the 50-day moving average, 99.54. Probably a decent buy signal, at least for a couple of hundred points towards the 200-day moving average at 10.161, but very much in the balance here. RSI just below 50 as well, so slight negative momentum on that, or from that indicator. Onto the US markets, and here we have the Dow appearing to start a rollover process here. We did close above 17,500, which is the key support area, so still in the balance. RSI 43 is very much tipped towards being a sell. That's a leading indicator on the downside, and if you're an aggressive bear, you'd be selling with a stop loss just above the 50-day moving average at 17,673, looking for the 200-day moving average at 17,117. On to the S&P, and here we can see that it's actually quite surprising in terms of the, if I get the right market up here, quite surprising that this market hasn't been able to fall more quickly. Let's say 50-day moving average 2058, so we're well below that now, but still hanging on doggedly to that 2030 to 2040 support zone. 2033, the low in April, and probably one would want to see an end of day close below that to be sure that this market is heading towards the 200-day moving average of 2011. But RSI 45, so that is a leading indicator on the downside. At the moment, probably the easiest strategy is any strength towards 2058 regarded as a shorting opportunity. Onto the Nasdaq, which remains within its recent range, 4,300, 44.20, the 50-day moving average at 44.24, and support from this line in place since the beginning of March at 4,300. RSI at 44, but seemingly bouncing between 40 and 50, so no big sell signal yet. Easiest thing, either trading the range or waiting for the breakout of that range at this stage. For sterling, looks like the Brexit people are losing, given the way that this has bounced so well off the 50-day moving average at 143.53. Initial target, the 200-day moving average at 147.99. Best case scenario target up to 150 at the top of that rising trend channel from January. End of day close stop loss is the 50-day average itself. For euro dollar, sort of a weaker picture here, back towards the floor of this rising trend channel from the end of last year. That's running around 111.80, so gives us a potential area to go long. RSI still well below 50 at 38, so that's also giving us a look to the downside, and we could even hit that 200-day moving average at 111 before this market recovers, even if it is going to do so at all. This obviously could be the start of May, could have been that buying climax peak through 116. So very much on alert here for a major top here in the euro. On to dollar yen, where probably one of the few markets which has actually behaved itself over the last week or so. We've hit the top of this falling trend channel from January, and the suggested 110.20, 110.50 target range. Looks like there's still plenty of gas in the tank as well, so this could go back towards 112, which was the late April resistance area, over the next few sessions. RSI only at 56, so plenty of momentum still left in this market, and looks as though the yen is very much back, or this cross is very much back on an upward trajectory, i.e. a weaker yen. Finishing off with gold, and here really looks like a bit of a top in place. We've got this formation here, which is sort of like a double top through towards $1,300. Neckline support, which obviously hasn't broken yet, at 1240. That's everything relies on that. We could still obviously head higher while we're above that. Buy trigger at this stage, probably an end of day close above the 10-day moving average, which obviously should also be taken with a pinch of salt, given the way that we had breaks above the 10-day line in recent sessions, and the no momentum was found. The other point to note is the way that this long RSI support line from November, December has actually been broken. That could be a major leading indicator on downside, perhaps towards the 1200 zone, or even the 200-day moving average at 1159. Remember that we just went straight through that and didn't test it as support on the way up. That's it for me. More updates at the same time tomorrow.